everyone to Business Morning. It's a Thursday, the 15th of August. I am boasting Amafaye. Let's get the next 1 hour together with the biggest of all the news and events around the world of business and markets. Of course, if you're focusing on what's going on in Nigeria, you need to spend some time to pay attention to what is going on outside in the rest of the world. A big selloffs hit global stock markets as fears of recession in major economies such as the US, Germany, UK, and elsewhere rattle investors and analysts. Of course, yesterday we saw the US 10-year bond and UK Treasury yield curve inverted as Argentina's economic and markets turmoil added to nervousness around the world. The market's volatility, however, was not helped by President Trump's tariffs application delay till December on some of Chinese products. If we check the commodities front, oil futures dipped just as gold at $1,520 an ounce leads the flight to safety, followed by silver. Meantime, emerging and frontier markets were also knocked by the headwinds from the developed markets, but some analysts say emerging markets are still a buy. Coming back home is still going to be a very busy half of August. We'll spend some few days on holiday, so let's give you a heads up on what are some of the critical economic data for us here at home in Nigeria as we get set for a very interesting period from Monday next week, in particular with the presidential retreat for the new cabinet ministers. As you think about the political and fiscal space, these are some economic data that will be coming through to you from tomorrow. Today we have a very interesting automotive price watch, which is the MBS says puts on its calendar. But tomorrow is the big story around the July consumer price index and inflation report. That's a three-star report that we put some stars around those data for you, just to let you know how big it is on our own calendar. Of course, we're starting that today with financial derivatives, giving us the outlook on the July inflation and what the food discussion is all about in our inflation mix. On the 19th, with the FAC June 2019 report, that's a bit of a look back data in case you need it for whatever you're doing. Then on the 20th is a very big story. Nigeria's capital importation report for the second quarter. What's the outflows and inflows into the country in the second quarter ended June? That data out to you on the 20th. Then on the 22nd is the GDP. Well, not that GDP, but the GDP in terms of expenditure and income approach for 2018 is a one-star economic data. We think you might just need that as a bit of your look back into the year we finished. Then, of course, on the 23rd is the banking sector data. That gives you, the MBS publishes the credit report, the e-payment channels and all of that. You want to know the state of the banking sector in terms of critical data. That's coming through to you on the 23rd. The second day is another triple-star economic data. That's your foreign trade statistics. What's Nigeria's balance of trade and balance of payments in the second quarter, April to June? You don't want to miss that on the 24th. Then we'll go down to 27th. It's your FAC July 2019 report. On the next day is the household consumption and expenditure for the second quarter, and we'll be wrapping up the month with the terms of trade for the second quarter on the 31st. We're expecting second quarter GDP numbers sometime in the month of September, but we'll check that out for you, everyone. But just keep some of this at the back of your mind. The terms of trade at the end of the month is a triple-star economic data for you as well. So let's get to a bit of a sense of what's going on in the insurance sector. The insurance regulator, NICOM, is still pushing for the end of June 2020 for all insurance companies to recapitalize. So one of them, which is a listed insurer, Consolidated Hallmark, updated the market on its plans to attain new capital threshold at the end of June next year. The insurer says its first line of action is to issue additional shares by way of rights issue, and that will help the insurance company get additional 3.9 billion naira to meet the new regulatory capital of 10 billion naira. So if you're in Consolidated Hallmark PLC, you have an idea what the company plans to do. It says it has other options, however, which includes private placement, public offer, mergers and acquisition. But All of this will be communicated to the market in due course on definite and concrete arrangements that will be implemented in the next few months to meet the new regulatory threshold. So where is Consolidated Hallmark Insurance in brief? This was what the company reported. Says it did 19% growth in its gross premium for last year, 330% growth in income line from its retail business, 87% compliance with the NICOM's corporate governance principles, and 84% compliance with similar principles by the SEC. And, of course, credit rating of BBB from Augusto and Co. Consolidated Hallmark currently has a capital base of 6.1 billion naira at the end of last year, so just at 3.9 billion, and the company hopes to cross the 10 billion naira threshold for the new horizon the insurance sector regulator want to achieve. Okay, let's put some of this as we look into yesterday's trading day. We lost about 1% on the market. We're part of the frontier markets. The market is still slumbering. Temple Ashaju is, however, awake, as it were, to the market's numbers. That is live to us from our studios at the Nigerian Stock Exchange this morning to give us a sense of how we finished off on the first trading day after the public holiday. Temple, good morning. Welcome to the show.
Good morning, Bosun.
It's good to have you.
We lost some more money again, over 108 billion naira. What's what we lost yesterday, Bosun?
That's not good news. If you ask me, the market has been bleeding. So, what are the details? They said the devil is in the details.
Sure. Correct, Bosun. The devil is in the detail. I mean, it explains that basically the market hasn't been too good. You've seen serious exits of a lot of investors in recent time. I mean, since the year opened, we've been seeing a consistent exit of the investors from the market. But at a point in time, they kind of reduced their interest to the barest minimum, thinking there will be some kind of facelift, maybe post-election and all of that. Since they didn't see a sense of that, so given the trade tensions we're beginning to see now, it gives them more reason to actually take out that minimum. And that's the reason why we're seeing this consistent loss, which doesn't concern the Nigerian markets alone. If you look at the four major markets in Africa, talking about Nigeria, Kenya, and of course, South Africa, actually. For Nigeria, for example, the turnover that we've seen has averaged some $11.8 million in recent time. If you look at Kenya, that has averaged some $6 million. And if you quantify what we are doing in Nigeria in terms of year-to-date performance, losses stand around 13.83% year-to-date as of yesterday. If you look at what Kenya did as of yesterday was basically 10% plus year-to-date. That's the losses that they've recorded year-to-date. For South Africa, in the last 2 weeks, things have become challenging for them as well. And the reason is not far-fetched. It's basically this whole trade tension that we're seeing from emerging markets that is rattling all the economies as we speak. So if you look at their year-to-date performance, it has now moderated to a positive position of just 2.4%. So this whole concern that we're saying is not peculiar to the Nigerian market alone. 46% of what we've done so far in terms of turnover is what can be attributed to foreign portfolio investors in the market as opposed to what we have with the domestic investors here. So basically, investors don't need to panic too much because, again, when you see the market going down or tanking this way, it actually poses opportunity for a lot of smart investors to actually take position. I know the argument will be that maybe there's no money in circulation. However, whatever little amount you can actually get hold of at this point, it's the market right now. This is the time for you to actually put such funds. But yesterday, in terms of volume, we're positive 6.4%, negative in terms of value of the transactions that we saw across the market. Sectorally, we were negative across 4 of the major sectors, but the fifth sector, which is the insurance sector, recorded some positive gains, 0.45%. Of course, you know that's about the only sector that is recording some gains and that is performing outperforming all other sectors that we have in the market in recent times. And of course, that is due to the recapitalization exercise that is hitting that sector, given the 30th of June 2020 timeline that they have to recapitalize, which also informs the Consolidated Hallmark Insurance news that Bosun you read out earlier. If we do the energy sector now, you realize that there was basically nothing much in that regard. I mean, I was looking at the number of Total this morning. It has depreciated seriously to 105 naira. This is a company that was trading way above 200 naira before now. Now, yesterday, it lost some 7.8%. That's not too good. If you look at the NASD OTC, things in that region is not different either. It was negative by some 0.03% yesterday. And the fixed income market, the story is not different either. I mean, we've seen some significant sell-off on bonds, and of course, Treasury bills saw serious high yields yesterday, Bosun.
Yeah, it's a very quite interesting time. At Temple, yesterday was a primary market auction where we saw investors asking for a higher yields on short-dated treasuries. That'll be a conversation later on the program. Everyone looks like it's getting a little bit hotter out there. Thank you so much, Temple, for coming through on this conversation. Thank you so much for bringing us up to speed, where the markets will get a bit more sense of that within the hour on the show. We're asking questions. What happened yesterday? The U.S. 10-year, the yield on U.S. 10-year bond inverted for the first time since 2008. And, of course, we saw the inverted yield curve on the U.K. Treasuries, also the first since 2007. And that unnerved investors around the world. So we did a primary market auction for the first time since the week started. Of course, we spent Monday, Tuesday on a public holiday. And, of course, we saw a result that you have there. The range of bids was so much. The bids were also out of this world. Let's bring in Chukwudi Nwokeke, who is a fixed income dealer at FSDH Merchant Bank. Good morning, Chukwudi. It's good to have you on the program.
Yeah, thanks for having me. Good morning, both.
I'm sure you folks who are coming back to work after the holidays must have been somehow unnerved yesterday when you saw what happened in the U.S. and in the UK. Then you saw the primary market auction yesterday. The bids were straight out of this world. 364-day PMA, 122.8 billion subscription for just 20 billion that the central bank wants to sell. What's going on?
That was contrary to the volumes on offer. We just had 34 billion on offer, which was a rollover of what matured. That matured today. So the subscription, like you said, was well over what was on offer, and we saw a reaction in the closing yields as well. Slight drop in the 91 days to 9.7 from 9.75, while the 182 days went from 10.6 to 11.35, and the 1 year from 11.18 to 12%. Today, we have almost maturity of about 49 billion coming into the system. CBN has already announced OMO auction for today to mop that up, and also FX refunds coming in with an offer of about 150 billion across 3 tenors, 84 days, 175 days, and 350 days. We expect the market to react again today. Yesterday, we saw yields go up about 60 basis points in the treasury bills market, while in the bonds market, we saw movement by about 25 basis points in reaction to all that's happening around the world. We saw quite a bit of a sell-off yesterday, mostly because market has been tight for the past 1 week, and people were trying to raise liquidity. That's what we saw today. We expect that to continue today.
Yes. So, Chukwudi, how are you folks who are dealers and analysts trying to adjust to the current market scenario in terms of where you think the yield curve is taking us?
Well, we would adjust accordingly as market trends upwards. We expect, like I said, the yields will continue climbing, but not to certain levels. I think 14 might be a threshold for now, pending looking at market liquidity. If the liquidity continues to tighten, we might see a rise above that. But for now, we think about between 13 and 14 for treasury bills looks good, and it looks good for position taking if anybody is in that market. Well, for the bond side, we've seen yields move from levels below 14% to above 14%, looking good as well. But we think that might go up a little bit more, and that will be a better time to take positions.
Yeah, so do you think this is a new scenario of the yield curve or the yield position on Broad Street that we will now have to contend with, perhaps until September MPC meeting, or likely holding us through the rest of the year?
I think for now, we'll look at the short term and not look beyond August, September. I think between August and September, we might see yields hover around the 14% levels. And that's what we expect, at least in the short term, until we have that MPC meeting.
And you think that MPC meeting is very crucial for how we'll wrap up the year, technically speaking?
Technically speaking, yes, it will give us insights on the direction the CBN is going, and the market will adjust accordingly.
Are you folks discussing the speech around the FX ban on food imports? Is this something you folks are discussing at management meeting or strategy meetings already?
Yeah, well, we discussed that. We keep discussing it. I believe the government and the CBN will align accordingly and show us the way forward. If the president, in his wisdom, thinks that that's the way to go, I think the country has to adjust as well.
Okay. Chukwudi Nwokeke of fixed income dealer at FSDH Merchant Bank. Thank you so much. We appreciate your time.
Thank you very much for having me.
Chukwudi out of FMDQ Exchange Place. So let's go to the home for stocks, and that's the Nigerian Stock Exchange. My colleague, our business correspondent, Edition Iwang, is standing by to bring us up to speed about today's trading day. Of course, it's still early hours there, so this is more like an opening calls. What are you reading on the ticker tape this morning, Edition? Good morning.
Good morning, Bosin. Well, the market is up marginally. We're seeing some 0.11% gains at this time, which is largely driven by the industrial goods sector. That sector is currently up by 1.65%, and that's by 9.81% gain in Cement Company of Northern Nigeria. So that's really pushing the market now. Also, the banking index is up, while the other sectors are unchanged at this time. But the day is still young, so we'll see how the rest of it goes. In other news, Bosin, you mentioned earlier about consolidated hallmark insurance. Now, in line with NICOM's recapitalization directive, where it reviewed the minimum paid-up capital for all insurers doing business in the country, Consolidated Hallmark Insurance has shared its plans to reach that goal. Now, because the company operates under the general business insurance sector, its capital has raised from 3 billion naira to about 10 billion naira, and the company says right now it has just about 6.1 billion naira, so it needs to raise 3.9 billion. So the company's first line of action is to issue additional shares as a way of rights listing or rights issue, I beg your pardon, giving existing shareholders the opportunity to increase their stake in the company and also, take advantage of the lower price offer. The other plans are to either, do a possible merger and acquisition or private placements or public offers. But the company says it will communicate in due course whatever plan, it decides to go with. Yesterday, the company closed down by 9%, losing some 3 kobo. And, we don't know I'm not too sure if Consolidated Hallmark Insurance has already held its 2018 calendar year AGM. But if it has not, this will form part of the ordinary business it will discuss at its next AGM, which usually holds in Lagos. Now, Bosin, a lot of insurance companies are dotting the I's and crossing the T's. You have Sovereign Trust Insurance, which has already offered over 4 billion of its ordinary shares as a way of rights issue. We have Lasaco also, in line to do same. So we'll just see how the rest of this goes. Let's not forget that NICOM has given insurance companies up until the 20th of August to submit their plans and has also told them not to borrow. So the question now is, will all these companies do a merger and acquisition, or will they do private placements or public offers? So we'll see how all of that goes. But this, would be an opportunity for probably some non-listed insurance companies will come into the market seeking some public structure, public company structure, and this would also be good for the capital market at large, Bosin.
Yes, we'll keep an eye on insurance. Despite other big stories out there, of course, the insurance sector is also very important. Thank you so much, Edinyong Iweng, business correspondent out of the Nigerian Stock Exchange trading floor. Let's leave it there. Tomorrow is a Friday. It looks like it's going to be a quiet Friday, but we haven't had any TGIF over the last 2 Fridays. No thanks to President Trump and the entire trade fight and then the currency conversation. Now we've added the bonds to the headache that investors and analysts have around the world. But let's take it all cool. Let's hope tomorrow looks a lot better for everyone. Then we had a very nice weekend. I'll see you then.